Hi, Rachel and Doug Swardstrom here, talking about a very important real estate investment tool, the 1031 exchange.
Doug and Rachel Swardstrom here with the Swardstrom Group and Coldwell Banker Realty, and we're here in this beautiful setting of a listing we have in private gated Shady Canyon here in Orange County. And we're here to talk to you today about 1031 exchanges. What are the guidelines, the types, and the benefits of 1031 exchanges? But before we do that, I want to talk to you about what is a 1031 exchange.
So Doug and I have had the privilege of being investors and having rental properties and selling those. We have MBAs and we love what we do, but feel free to touch base with your CPA for your specific situation.
So what is a 1031 exchange? A 1031 exchange, first of all, is one of the most powerful wealth building tools available to real estate investors, and it's important for you to know how they work. So a 1031 exchange is simply a reference to the IRS tax code, section 1031, that allows investors to defer their taxes on their properties by buying a similar property within 180 days.
So before closing on your investment property, you need to identify an asset exchange company. This company is one that specializes in 1031 exchanges. It's different from escrow. So this is a company that will hold your sales proceeds for 180 days from start to finish for the 1031 exchange. So your first timeline you have to meet is to identify a replacement property. You can identify up to 3 in 45 days. You have to complete a letter that is unambiguous with an address to say, I would like to purchase 123 Main Street. And you can have up to 3 properties that you would like to consider exchanging. And at the end of 180 days, you have to complete the sale. So first 45 days, identify a property, and you have to close by 180 days. 181 days disqualifies you from this amazing program. So you've got to stick to your timeline.
So there are 4 types of 1031 exchanges. Rachel described the most common one, which is the delayed 1031 exchange, which allows for up to 180 days to close escrow on a new property. But there are some others that we want to let you know about. There are 3 others. Number 2 is the simultaneous 1031 exchange, and that is when you have concurrent closings on both properties. It's not that popular, it's a little old-fashioned actually. And then there's number 3, that's a building construction / improvement 1031 exchange. That's when you have the ability to go out and close escrow on a vacant piece of property or make significant improvements, but it's not that popular today because depending on the city, you have to go through the permitting process as well as building costs. Number 4, and this may be appealing to a lot of our investors, is what's called the reverse 1031 exchange. That's when you actually have a chance to go out and buy the piece of property first, and then you have 180 days to sell your existing property. It's one that we can talk to you a little bit more about another time.
So with all that said, I just wanted to let you know there's 2 misconceptions. First of all, when you sell a single family home, you have to buy a like-kind property. It doesn't mean you have to buy another single family home. You could buy a condo, you could buy raw land. So that's something that's commonly misunderstood. And the second thing is they think 1031 exchanges are only for millionaires. That's not true. Most of the business in 1031 exchanges are from mom and pops. They're from regular families that maybe their mom or dad left them a property that was an investment and they kept it as a rental and now they're going to sell it. Or someone that's been in their home for many years and has so much equity built up and now would like to think of deferring the taxes when they sell that. So those are 2 common misconceptions I wanted to clear up in 1031s.
So for our high net worth clients, 1031 exchanges can be used effectively too. For example, if you're delaying selling your home because you're concerned about capital gains taxes, there are strategies we can use and help you with your CPA to help you defer taxes and using the 1031 exchange. And also there's a special statutory trust that can help you with deferment. So if you'd like to get in contact with us, there's no obligation. We'd love to talk to you or your tax planner about some of these strategies. Just give us a text or give us a call. We'd love to talk to you. If you found this video helpful, please subscribe. Give us your comments below, what you'd like to hear more about or any questions you might have. We'd love to meet you and talk to you more.